Mr. Speaker, sir, in these troubling times, budget statement speeches are really a source of reassurance. DPM Heng mentioned about last year that he addressed the House 9 times over 5 budgets and 2 ministerial statements. Well, we certainly needed that many doses of reassurance, support, and intervention last year. Otherwise, the fallout and impact from the pandemic would have been even more devastating for our businesses and for Singaporeans. We have put to good use the war chest and firepower that we have built up over the decades, and by any measures, we have achieved the intended outcomes. Interim assessment by MOF and MAS determined that relief measures from the 5 budgets have helped averted a deeper economic recessions. The economy contracted by 5.4% in 2020 instead of contracting an estimated 12.4% without the government support. The hefty $22.6 billion of GSS, coupled with the $17 billion worth of financing scheme, helped keep many businesses afloat and prevented massive job losses. Under the JGI, 110,000 job seekers were hired, and another 76,000 Singaporeans were placed under the SG United Jobs and Skill Package. Households were also supported with various packages such as the CSP, the SIRS, the CSG, and the TRF. And these measures helped mitigate the inequality during this difficult year. And on average, each household received $2,000, while the lower income household received up to $2,008. On the public health care fund, a total of $13.8 billion was committed to protect and save lives. Singaporeans felt safe, and our fatality rate from COVID-19 is still among the lowest in the world at 29. Many schemes are still ongoing, and their effects are still working through the system, through the economy. But I can say that the strong and decisive intervention by the government have made a significant difference in saving lives and livelihood during this crisis of the generation. Into 2021, the battle against the onslaught of COVID-19 continues on both the healthcare and the non-healthcare front, and continue to require considerable amount of financial resources to safeguard Singaporeans, families, and businesses. Among the key highlights for Budget 2021 are the $11 billion COVID-19 resilience package and the $900 million household support package, among others. These are necessary measures to tackle the ongoing crisis and to strengthen social safety nets. Overall, Budget 2021 remains highly expansionary, with total expenditure projected to grow by 8.8% from FY 2020, which is a high spending year, and 35% above pre-COVID FY 2019 spending level. Among the big ticket items continue to be the COVID-19 related costs such as vaccination, which amounts to $1 billion, testing, clinical management and tracing, which is likely to cost another $3.1 billion. Compared to the broad-based approach in last year's budget, in this year's budget, we heard a lot more about targeted and differentiated. And with many businesses resuming either most or all of their activities, it is timely and prudent to start tapering down the assistances so as to manage down the overall cost of the support packages. However, the overall expenditure remains very high, and notably higher than the revenue projected for this year, for the year, and hence we would still have to count on past reserves to fund the gap, albeit a much smaller amount this time. So I support the draw on the reserve to fund the COVID-19 resilience package, given the still grim circumstances where COVID-19 related expenditures continue to be very high and necessary, while the revenues may take some time to recover and to return. So besides the ongoing preoccupation with the pandemic, Budget 2021 steered our focus definitively to the future and to our longer-term challenges. As the DPM said, we must never stop thinking of the future. And this is indeed the hallmark of our nation's success and what makes us an exceptional nation. We have ambitious plans to continually expand and strengthen our overall infrastructures and to build a sustainable home for all under the Singapore Green Plan 2030. In charting our next future trajectory, we not only talk about the what's, but the how's as well, including critically how can we fund these investments at a time where our fiscal space is at the most constrained period. DPM announced the government's decision to issue infrastructure bonds, the SINGA bonds, to fund lumpy capital expenditures items such as rail lines, infrastructures to protect against the rising sea levels, and others. If these items are funded under the annual budget cycles, which is on a cash flow basis, it will have put significant strains on our budget allocations to other allocations. As these long-term infrastructures benefit current and future generations of Singaporeans, it is more equitable to distribute this fiscal responsibility across generations by way of a longer-term financing structure. So I support partly fund these massive outlays through long-term borrowing via the SINGA bond, and especially during this current low interest rate environment. The $90 billion borrowing cap is a necessary safeguard in addition to the scrutinies from the President's office and the Parliament. Also, having a wider variety of high-quality assets like SINGA and green bonds also help develop our capital markets and facilitate better liquidity management among our financial institutions. So the other exciting area in the budget 2021 is the $24 billion action plan to invest strategically for new growth and to emerge stronger. Even as we tackle the immediate challenges, we must not lose sight of our medium to longer-term economic imperatives. COVID-19, while it has caused havoc to the global economies and to our lives, has also triggered structural shifts on many fronts. And coupled with the accelerated technological changes and geopolitical shift, the current forces at play actually opens up interesting opportunities for Singapore. And DPM highlighted a few areas, such as how we can plug ourselves into the critical parts of the reconfigured global supply chain network, an interesting area to be in. Rapid digitalizations, where we can build new frontiers in digital connectivity, or making available capital tools to co-fund transformations and help our companies transform and grow, among others. Singapore needs to quickly adapt to the changed world and to be in the position to seize these opportunities and to build new competitive edges, and to do it among the early phases of these new structural shifts. As DPM has elaborated, we need to decisively build three enablers. Firstly, the vibrant business ecosystem. Secondly, make available a wide range of capital sources. And thirdly, to develop our own future-ready human capital and talents. And in all, the government will allocate $24 billion to invest in these three strategic enablers over the next 3 years. I will speak further on these enablers during the COS debate for MOF, MTI, and MOM. But just to say, these are exciting developments that will give our economies that pivoted lift, and we should be among the early movers. But for now, for this speech, I will focus on the funding of these $24 billion investments to emerge stronger. DPM indicated in his speech that he expects the economy to recover and the revenue projected will be able to support these expenditures for the investments. However, he also caveats that this is subject to the global health situations and the economic outlook. And to use DPM words, there's still a wide cone of uncertainty. There's also the potential downside risk to our revenues with regards to the ongoing discussion to revise the international tax rule under the base erosion profit shifting or BEPS 2.0 projects. Notwithstanding, DPM said that even if the economic and fiscal conditions turn out to be worse than expected, we must still press on to invest in these areas and to ride on the opportunities presented by these structural changes. I agree with the DPM that we must move now. Delaying or deferring this investment until our finances are back in good shape is an option, but that will mean passing on the opportunities to provide an early boost to our capabilities and to stay ahead of the curve, while other economies are still grappling and coping with the crisis. The question then is, should we draw on past reserve to support this additional spending? DPM mentioned in his speech that he has briefed the President on the potential draw over in the next few years if we are unable to generate sufficient revenue to pay for these investments. So while we should keep that option open, we could also consider other alternatives. We have already drawn our reserve in the last two FY in a row, and we should only consider this as a last resort. Reserves are our emergency backstop, and we need to hold or grow the base amount to ensure a growing, if not a steady NIRC. Each time when we draw on our past reserve, it also means divesting a part of our financial investment, and hence we will lose out on the returns from these investments over the long term. If the fiscal condition remains tight in this term of government, and these are indeed time-critical and worthy investments for the future, I submit that we can justify funding these emerging stronger related investments through a special purpose borrowing. This could be a once-off bond issuance earmarked to specifically fund these economic investments. That way, we also take advantage of our very strong balance sheet and our high credit ratings, where we can enjoy borrowing costs at almost zero credit costs, borrowing at zero credit costs, as well as to take advantage of the low long-term interest rate. As a prudent safeguard, we should also still set strict caps on such borrowings, and it should be still subjected to the approvals and the consent of the presidents and to the parliament's scrutinies. So finally, I want to talk about the more difficult part of the budget, which is the increase of the GST, likely to be between 2022 to 2025. DPM mentioned that no finance minister like to talk about tax increases. Well, similarly, MPs do not like to debate such issues as well. We all like to talk about how much we can spend, where we can spend. We have debated intensely the justification during the last 3 annual budget statements debates. And I agree with the government's fiscal principle that recurrent expenditure should be funded by recurrent revenue. This is sound, this is prudent, this is sustainable. And in particular, in the healthcare spending, we must ensure that it is adequately and sustainably funded to give Singaporeans the peace of mind that their long-term healthcare needs will be well taken care of and with certainty. Last year, I asked the DPM as to who pays the biggest shares of the GST based on past collections. He shared that foreigners residing in Singapore, tourists, and the top 20% residents household account for 60% of the net GST borne by all households and individuals. This is significant, and we do want to collect more taxes from the top 20% household and the foreigners. The unique critical features of our GST system is that it comes stapled with a series of permanent GST offset to mitigate the impact to our low and middle income household. As a result, the top income groups and foreigners contribute the main bulk of the GST, while the low to middle income group pay no or lower GST on a net basis. In this budget, DPM reiterated the government's assurance that should GST be raised, the $6 billion assurance package, which have already been set aside in the GSTV fund, will kick in and help cushion the impact for the low and middle income household. The majority of households will receive offsets to cover at least 5 years' worth of increases, while the lower income Singaporeans will receive even much more. For example, those living in the 1 to 3 room flats, HDB flats, will receive offsets worth about 10 years of the increases. So in Mandarin, 这一届的财政预算案呢，我最为担心的是，一旦消费税的上调，是否会影响到中低收入和年长国人的生活费？过去的几年呢，政府的开支的确不断的快速增长，尤其是在医疗方面的开支。从10年前的这个22亿，目前我们的医疗开支已经翻了超出5倍，高达120亿，从22亿到120亿，而且这个上升的趋势还会继续。一方面我们要不断的规划以及提供更多需要的医疗以及保健设施。另一方面呢，我们也要确保拥有足够、可持续和更多元化的税收来源，来应对这些还会继续增长的开支。我们必须平衡 这个开支和收入，这才能让国人，尤其是年长国人，在医疗保障方面有更大的安心、更高的安全感。这是负责任政府的做法。我们不希望政府因为财政不平衡的缘故，减少医疗以及在社会福利上的这些开支。对我个人来说，我还是希望政府能继续的兴建更多的诊疗所、医院、养老院等等，也希望政府能给予国人更多在医疗上、在住房上、在教育、交通方面的津贴。我们都需要更多的津贴，但是我们都知道这些津贴、这些开支都是一个需要财政的资源来支付。副总也再次的重申，一旦消费税上调呢，政府将动用以各自的这个6亿元的这个定薪援助配套 （assurance package） 来协助中低收入家庭抵消或者减轻这个上调的影响。在这个配套上，平均每名成年国人在5年内可以获得700到1600元之间的这个现金回扣补助。比如说，每一家4口，总收入大概是6000元的家庭呢，会获得将近7000元的这个协助回扣。因此呢，大部分的家庭所收到的回扣将能抵消未来5年消费税上调的这个冲击。低收入者的家庭获得的回扣会更大，可以抵消未来10年的这个额外消费税的这个开支。So in conclusion, the last 1 year has been the most challenging time in our fiscal management. We have set new precedents in many areas, the largest budget deficits in our history, the largest draw on our reserve for 2 consecutive years, and of course 5 budgets and 2 ministerial statements all in 1 year to fight COVID. This budget also set in place the framework to fund our long-term infrastructure with long-term borrowings to avoid situations of extremely large outlays in each budget year and to achieve better intergeneration equity. This is a shift from our past approaches, where we tend to cash fund all our expenditure with current budget allocations or using accumulated surpluses. We have to move with times in the way we manage our government finances, just like how we have evolved the NRIC framework about a decade ago. But it's important to remain steadfast to the values of prudence and discipline, and to ensure that we operate on a balanced budget basis, and also to jealously safeguard our reserves so as to continue growing it for our future generations, just like what the past generation have said it for us. So we are fortunate to be able to confront and tackle this crisis of a generation in a position of strength. It's always a good position to be there, to be in a position of strength. Otherwise, it will be terrible. So let's keep thinking long-term, continue to build new frontiers of growth opportunities, continue to strengthen our position of strength, and to emerge stronger together from this crisis. So I support the budget.